This is the time of year when we start to look back, right? And 2021 was the year of the EV. And this year, investor money poured into electric vehicle makers from Rivian to Lucid, hitting the public market at a combined value of $150 billion. And they have almost no cars on the market, with auto giants Ford and GM, which have a lot of cars on the market, jumping into the mix and ramping up their production. 2022 is expected to be even bigger. How big? We'll find out now. Can supply keep up with demand? Who better to ask than EV supplier Piedmont Lithium CEO Keith Phillips. Keith, thank you so much for joining us.
Thanks for having me.
Is supply a major problem? Of course.
Yeah,
of course.
It is a major problem. I think lithium electric vehicle demand has been very strong. EV sales are up well over 100% this year globally. We're over 10% EV penetration globally now, which means 10% or more. I think it's actually 11% for 2021 of vehicles sold, passenger vehicles sold, are electric. Huge move from about 5% a year ago, 2% 2 or 3 years ago. So demand is growing very, very strongly. I think that'll continue. I think everybody will want an electric car once they understand all the benefits of ownership. I'm an electric car driver, best car I've ever owned. But the reality is it'll take a long time for the lithium supply chain to keep up, to grow, to catch up. Essentially, the lithium projects take a long time to bring online. They're not turnkey projects. They usually take 8 to 10 years to get from kind of concept to production. So that'll be a little bit of a drag on EV growth, realistically.
Is the White House ignoring the elephant in the room then? I mean, everybody, you say electric vehicle, the best car you've ever driven. Huge push by the administration to go green, get EVs and charging stations out there. But if you need lithium for the battery that goes into the electric car, and you're saying it takes, what, up to 10 years to get more lithium? Don't we have a major problem on our hands?
We do have a problem. I mean, the issue is China supplies about 90% of the world's lithium chemicals today, lithium hydroxide. The Chinese move pretty quickly, not just the government, but the Chinese private companies move very quickly to build new lithium capacity. They don't have much of their own mineral resource, so they need to get that from some other part of the world. Today, they get most of it from Australia. And in Australia, a lot of lithium supply is coming online. Again, that'll take time. There are half a dozen really interesting projects in the United States, including ours in North Carolina. All have been under development for 5+ years. We're each a year or 2 or 3 away from commercial production. So there'll be a lot of U.S. supply to come. It'll have a difficult time keeping up with the demand, but from our perspective, we're looking forward to a very frothy market. The EV business will boom in the U.S. in the 2020s. Every car company is going to want to get domestic battery supply to the extent they can, and domestic lithium supply to the extent they can. We think the market will need 40 times more domestic lithium by 2030 if we want to be fully self-sufficient. 40 times in the next 8 or 9 years. That's a tall order. That'll be difficult. I think anyone who can do it should benefit and should be able to become really important suppliers for the U.S. car companies.
Keith, why can't we move as fast as China can?
Well, it's interesting. I think the car companies can move fast. The battery companies can move fast. To build but building a car plant takes a year if you're Tesla, 2 years or so if you're anyone else, it seems. Building a battery plant's a couple-year proposition. A cathode plant similarly. Building a mining project and a mineral project is 6, 8, 10 years if you're lucky, and that just takes time. So we're moving very rapidly where we are. There are local permitting and approval challenges for any project, not only in the U.S. but elsewhere, and it'll just take time to bring those on.
Yeah. Do you have a deal with Tesla, and is that deal on track? I know some of their factories are stalled if you're looking at Berlin and Austin.
Yeah, we don't speak about our individual contracts with customers. We do have a good relationship with them. We announced a deal with them a little over a year ago, and we're moving forward with relationships with a lot of the car companies. What's interesting is Tesla is the dominant player in the EV business. We have immense respect for them, really super company. Everyone else is trying to get in the business now aggressively. The big incumbent OEMs, also people like Rivian and Lucid, who you mentioned. A lot of them, I think, will be very successful, and it's going to be an interesting race to see, from our perspective, the more the merrier. The more vehicles that are available. We have 3 people on our team who drive the Ford F-150. They're Ford guys. They want to drive Ford pickup trucks. There should be a Ford pickup truck in the next year or two. People who drive that vehicle are going to want it, and there are similar loyalists with other vehicle manufacturers as well. So it'll be interesting to see those cars come electric.
But does affordability become an issue now? Because we're dealing with potential shortages of key parts of EVs, and then we don't have Build Back Better, which included generous incentives for those who drive electric vehicles. And of course, the bigger incentives came from those companies that used unionized workforces.
Yeah, listen, I think affordability is something that is misunderstood a little bit with electric vehicles. So I'll give you a couple examples. So number one, raw material prices. So if lithium prices double, like they more than did last year, that might add $500 or $600 or $700 to the cost of a vehicle. It's not a small amount of money, but it's not a deal breaker, essentially, certainly in a Ford F-150 or a Tesla Model S or something like that. The manufacturing costs to produce electric vehicles are falling dramatically. Battery manufacturing costs, aside from the raw materials, are falling because for the first time in all time, people are producing batteries at scale. I mean, the first real gigafactory ever was Tesla's factory in Nevada a couple of years ago. There are now well over 100 on the drawing board around the world. So manufacturing costs for batteries are actually falling, even with raw material prices rising. And similarly with EVs, with Ford and VW and GM and Tesla and others, the more of these electric cars they make, the cheaper they'll become. And the operating costs of an EV are dramatically lower than an internal combustion car. I've owned my Tesla over 3 years. I've never had to have it serviced. There's been literally no maintenance. There are no oil changes, et cetera. And the fueling cost is about half of what gas costs typically across the country. So they're far cheaper to operate. Yeah. And I think people that own the cars learn that and enjoy that.
So it balances out. Keith Phillips, thank you for joining us.
Thanks a lot, Lauren.